Hi, everyone. Welcome to our webinar today. The topic is Escrow Evolution, Driving Efficiency and Deposit Growth. My name is Catherine Ring, and I am the CMO here at Tech. We are going to be joined today, and in fact have already been joined by Nathan Baumeister. If you flip to the next slide, Nathan, just a little bit about him, even though he's the one flipping the slides too. He is the CEO and co-founder here at Tech. So we have a great agenda lined up for you today. We have about 30 minutes of presentation, and then we'll go into a demo of the products. And if there are any specific verticals that you would like to see demoed, please feel free to write that into the chat. We built a multi-purpose escrow system, but we have custom features for each of the different verticals that we serve. So if you are having any technical problems, I would recommend switching to Google Chrome. I will help troubleshoot the best I can if anything does come up, and you will be receiving a copy of the webinar as soon as the session is over. So you can have that to share with your colleagues if you want to, or catch up on any specific points. So with that, I'm going to turn it over to Nathan. Take it away.
Awesome. Thank you, Catherine. And for all of you listening, thank you so much for taking some time to listen and chat about commercial escrow and sub-accounting and deposit growth and how it can help the financial institutions that you're with, all that fun stuff. It's always a distinct honor and privilege to be able to spend time with great financial institution executives throughout the country. So just to kind of begin, love to just share a little bit about the evolution of not just commercial escrow, but also commercial banking in general. Commercial escrow is a subset of the overall tools and things that you might need to serve very, very specific commercial clients. But the evolution of the overall escrow space has been really interesting to, one, learn and then now be a part of. But I think that you'll see a lot of similarities to other technologies and spaces that you've worked with in the past when it comes to commercial banking. So commercial escrow, first, one of the things that it's very known for is there's a lot of work. There's a lot of complication. There's a lot of new information that needs to be passed back and forth, et cetera, et cetera. So within the timeline of fulfilling these particular requirements, it started with a lot of paperwork. You had to be in branch. You had to fill things out. In fact, we talked to several commercial businesses that still have to do this to this day in order to open up their different commercial escrow accounts. Then, of course, the old fax machine. It was a way to be able to transport information a little bit more securely than through something like an email or whatnot. And so, banks started saying, okay, look, maybe you don't have to come to the branch, but you could use these faxes to be able to get us these sensitive documents over here so that we could do the things that are necessary. And then the commercial customers themselves, they have their own customers that they have to communicate with as well. So they would use those fax machines to do so. As email became more common adoption, strategy for communication and the security aspects of this became more robust. People became much more commonplace to be able to use email. But what was interesting with the evolution from an email perspective is lots of times the instructions or the asks were coming through email, but in the end, the work still had to be kind of passed off one to the next. And when you looked at some of the back end to try and automate some of this, again, some of you might be super familiar with different green screens and those different types of things that you have when you were first using computers. And one of the quirks of the U.S. financial institution technology market is that since the security and stability of software is oftentimes very, very important, it is not uncommon to find aspects of the business that are still run off of, green screen, mainframe type technology. Even, Bank of America has code embedded within their core platforms that are from the 60s or even the 70s that perform integral functions. It's like, well, if I have to figure out how to pull that out, there's a lot to unpack. And so, for a long time, first it was an evolution in the right step, and now it's, how do we move beyond that to now where you start seeing a lot of graphical user interfaces. This is obviously part of where we play as well, but using modern technology to be able to supplant some of these communications that had previously been used, or sometimes upgrade them. And so just taking a step back of kind of looking at that evolution in the application in the broader commercial banking space, one of the things that we like to talk about is that there are 4 modes of banking. And again, this is not specific just for commercial escrow, but this is in general. And one of the things that a lot of people get excited about, technologists like myself, is they always want to know what's next, what's the future, what is now, and then move out of the past. And so if you look at it from that time scale, the first one, as you're seeing up at the top, is human support, right? A business customer comes into a branch or a telephone or something like that, but it's human to human connection. It's a request, can you do this? And then that human goes and does that, right? And so you think about branch banking or telephone banking or those types of things. Now, the next group was the graphical user interfaces, right? Or in our particular parlance, in our industry, you think about the digital banking providers and cash management tools, and then mobile banking applications that allowed users to be able to actually input their instructions on their own through these nice, easily created or easy to use interfaces to be able to give those instructions. Now, as we keep moving forward into the future, so you have human support, user interface, bulk data exchanges. So a lot of flat files, a lot of CSV file formats or Excel or those types of things. You started to see commercial customers who had more and more sophisticated software and databases that wanted to be able to extract data from their data sets and push them to the bank to then receive those to know what actions to take. To where you come into modern times, you hear a lot about APIs, right? You hear about a direct connection, oftentimes in a real-time situation where, if I am a commercial customer, I have my own software that I use to run my business. I click a button here, and that will automatically transmit the information that the bank needs to know what to do on my bank accounts based off of what I'm doing within the software. And so when you look at the broader space of the 4 modes of banking, from the past to the present, human support all the way to APIs, the thing that a lot of us technologists get really excited about is we say, APIs is where it's going, and this is all we're going to do. But we forget about the fact that you actually need to have support for all 4 modes of banking when you're dealing with a business customer, because all of them are going to be at different phases in their company. Could be based off of their technology stacks. It could be based off of their specific use cases. It could be based off of size of company. And so that's one of the big things that we always like to talk to with our clients, and what we look at when we're building out our platform is we can't just build to the past. We can't just build to the future, but we have to look at what are all of the active channels or the modes that people are choosing to bank with their financial institutions. The other big, broad industry trend that we are seeing that impacts a lot of what we do, but also what you all do with your financial institutions, is this idea of horizontal service offerings versus vertical service offerings. So I just want to play that out. And you can see we have some examples here. So first and foremost, let's just kind of define what this means: a horizontal vertical offering versus a vertical offering. Let's take an example like wire transfers. So as a bank, you would typically go to your core system or maybe some other system. You say, I need to have wire capabilities and I need it for commercial customers. And then you'd say, you'd get it turned on. You'd have that set up again, whether it's in the core system or a separate provider. And then I could go through the ACH escrow accounts. It's all the same. I have a vertical offering that I'm going to take to all of my, I have a vertical offering, a horizontal offering that I'm going to take to all of my commercial customers. Wire transfers for all commercial customers, ACH for all commercial customers, escrow accounts for all commercial customers. And this is really nice and efficient from a bank perspective because you have one offering and you're good to go. The problem that arises is then when you start looking at specific verticals of commercial customers, so property managers, 1031 exchanges, municipalities, attorneys. I could continue to go down the list, but I'll just stick with the ones that are here on the slide. And you say, wait a second, the way property managers use wire transfers, or the way that they use ACHs, or the way that they use escrow accounts is different than how a 1031 exchange qualified intermediary does, which is different than the way a municipality does, which is different than the way an attorney does. And so in the past, as we've gone out with horizontal offerings in the banking industry, say I have wire transfer for commercial customers are excited. They're like, okay, I can do wires. Oh, but I have these specific needs that I can't have fulfilled within your horizontal offering. So oftentimes they would take on additional work that they would have to do to take this general offering and customize it to their own needs. With the advent of AWS and cloud computing and the ability to write more and more complicated software for less and less money, this is where you saw an opportunity that was exposed, not just from a banking perspective, but overall of vertical SaaS platforms, vertical software as a service platforms, where a software company would come and say, property managers, I see you. And I see the very specific needs that you have as property managers, which is different than the specific needs that these other commercial type businesses have. And so I'm going to take that manual work that you're currently doing to be able to make up for these horizontal offerings. And I'm going to have a very specific tailor-made experience just for you. And now you've seen that take off. So within the property management space, you have vertical SaaS companies like Yardi or Appfolio or Buildium, and then you have that across all of these different verticals. So the question becomes, is we as an industry are supporting commercial customers, what do we do? Where do horizontal offerings still work, even though some of these verticals have different needs? Versus where is it that we need to figure out how to make tailor-made experiences for those different verticals? And so, again, this is a really broad takeaway that I would love for you all to challenge yourselves and think through, that as you go to market to support various different commercial customers, if you kind of double click and go into that next level, who are the actual types of businesses that you're trying to support? And what are the different needs that they have that you might be able to fulfill to differentiate your own offerings from a horizontal perspective? And then how do you then take your offerings that you do have within a technology stack to make it work for them? So today, obviously, I want to focus on the commercial escrow use cases. But again, I hope you kind of take this as a broad takeaway for your go-to-market strategy to build out commercial relationships. So let's define a little bit more about, when we're talking about commercial escrow and sub-accounts, what's the specific use cases that we have here? So first, high level, you kind of have two different types of commercial escrow and sub-accounts. The first one's a three-party account. And so you'll see here, there's your typical account would have you as the financial institution are holding the funds, and those funds belong to a company or an individual that both owns the funds as well as manages the funds. However, with an escrow account, we break that typical relationship and we throw in a third party. So the bank is still holding the funds. There is a company who's in charge of the funds. They're the ones that can decide, moving to move money and withdrawals and all that and closing the accounts. But the actual funds belong to another third party. When you start talking and thinking about three-party accounts, there's a lot of complication that comes up with this. The first one is your typical banking technology ecosystem is built for two-party account relationships, not for three-party account relationships. So you start thinking about statementing, getting W-9s or W-8 forms. You think about what are the compliance implications. You start to think about access. Who needs to have access to what? When they do have access, what type of permissions do they need? All right, so there's a lot of complication from that perspective. Then the other thing that comes up when you have three-party accounts is oftentimes legislators look at this type of relationship and say the company can easily take advantage of the customers Therefore, I'm going to legislate protections on what the company can do with that money and what they need to do to manage that money in the right way to protect the customers. Now, it would be great if there was some sort of federal standard of all three-party accounts throughout the US. Here's the standard that we follow, and this is how you protect the customer. But that's not what's happening at all. What's happening when it comes to three-party accounts is, first, the rules will vary based off of the specific industry that we're talking about. Second, you will oftentimes find that even within a specific industry, like let's take law firms as an example, the way that they handle a qualified settlement fund is different than something that would go into an IOLTA account, which would be different than something where they are holding money in escrow for mergers and acquisitions. So the first place that it varies as far as the legislation perspective goes is industry. The second one is going to be specific use case within that industry. And the third one is going to be jurisdiction. In some cases, you have federal level laws. In some cases, you have state level laws. In some cases, you actually have laws that go all the way down to the local jurisdiction. So it becomes a very complicated space to play into. So that's kind of the first example. The other example is not nearly as complicated, but it's definitely used quite a bit. And those are for subledger accounts. So you have, as a commercial entity or some sort of organization, you have a lump sum of money, but they need to be subdivided for various different reasons. Oftentimes it's for a project basis or something like that. So we have an example here from a municipality. Total, they have $800,000, but they need to break it up into different $100,000 chunks so that they can have clear accountability of those funds being used for those specific projects where they have approvals to do so. So those are the two really broad use cases, the three-party accounts and the subledger accounts. If we dive a little bit deeper and say, okay, what are the types of commercial customers that are using this? You have landlords, property managers, title companies, law firms, municipalities, 1031 exchanges, real estate offices, nursing homes, nonprofits, funeral homes, and the list could go on. But there's a lot of use cases where this pops up. So every single market that you are going after and that you find yourself in, would you all have an opportunity to go with all of these verticals or certain amounts of verticals? Will kind of depend on your current account holders that you have, perhaps those businesses that you have on your loan portfolio, as well as the types of businesses that exist. But here's what I'd love to do is we've been talking really broadly and somewhat theoretically about these four modes of banking: horizontal offerings versus vertical offerings, three-party accounts and subledger accounts. What I want to do is I want to take all of that and do very specific application. So I want to just share a couple quick stories of actual use cases within some of these verticals to be able to make this theoretical stuff more real on what this actually looks like in real life. Now, the ones that I'm going to share may or may not be applicable to your market, but what I'm hoping is by me sharing some of these examples, it can bring to life some of the ones that you're like, oh, now that he shared that example, I can think of this, this, and this within my marketplace or within my financial institution. So what I'd like to do is start with property managers. So there's various different reasons and ways that a property manager can use escrow and sub-accounts. For the purposes of today, I'm just going to focus on security deposits. So security deposits, most of you are probably familiar with this because you've rented something at some point in time in your life. You rent an apartment unit and you have to put down the security deposit. The security deposit goes to the landlord or the property manager. When it goes to them, however, the funds don't change ownership to that property manager and that landlord. Rather, they hold it in escrow until which time you move out. When you move out, they look to see if there's anything that's damaged or whatever. If there is, they'll use some of that security deposit or all of that security deposit. But if there isn't any damage or they just used a portion of it, they need to give you that money back. So it's a great example of an escrow use case. Now, here's the interesting thing. Depending on which state you are in, as well as sometimes the local jurisdiction, the rules that a property manager or landlord has to follow on how to handle these security deposits will vary. So I'm just going to pick a particular region of the country where there happens to be a lot of units, residential units, and there are two states right next to each other, New Jersey and New York. And I'm just going to use it, the tale of two cities, or the tale of two states in this particular case, of some examples of different ways that the legislators in those jurisdictions have chosen to play out with security deposits. So I'll start with New Jersey. In New Jersey, first and foremost, the security deposit, once it is opened at the bank, a notification has to be sent to the tenant of where it's being held, as well as some additional information. And second, that security deposit has to earn interest, and that interest all has to go to the tenant. So the landlord cannot keep any of the interest, nor can it be in a non-interest bearing account. Now, that interest cannot just sit in that account until which time it's closed. The interest actually has to be dispersed on an annual basis. In addition to that, when it's time to close, you have to close. Once you close the security deposit, if you keep any of it, you have to provide an itemized deduction, and then you need to get those funds back to the tenant within a very specific time frame, right? So laid out, there are some very specific rules there that they need to follow. Now think about that from a banking perspective. You have to calculate interest on the individual security deposit. So that means it needs to be its own account. Interest is going to be earned, but it's going to go to the tenant. That means you need to get a W-9 or W-8 form from the tenant, who is not your customer, because your customer is a property manager or landlord. You then have to, of course, produce 1099 INT forms for all of that. You or the landlord has to figure out how to disperse the interest on an annual basis. Let's be honest, we're not talking about huge amounts of money here, but it still needs to be dispersed. Now, that same property manager, they have something out in New York, different rules. I'm not going to go through all of them, but just to kind of give you an example of one of the big changes, it still has to be an interest-bearing account. All the interest has to go to the tenant. However, the landlord can keep a portion of that interest as a fee for managing the security deposit, but that's capped at 1%. The other thing that's really interesting in New York is when the account needs to be closed, the funds need to get back into the tenant's hand or be delivered within 15 days. So very, very quick turnaround time. And then I'm in Austin, Texas. If you go to Texas, they don't have most of those rules, right? So it changes based off of the different states that you're in. It's crazy, but you think about that complexity of state by state or jurisdiction by jurisdiction management, and you think about some of those things that need to happen. And that's one of the reasons that we've built our platform is so instead of having to do that via fax or email or whatnot, it's very easy for your landlords to be able to do this either through some bulk imports or through a very easy to use user interface or even APIs. So property management customer from one of our banks, we have 800 units. So this is going to save us so much time. When can we get on it? Right. We love hearing stuff like that. All right. 1031 exchanges. Some of you may or may not be familiar with 1031 exchanges and qualified intermediaries or accommodators that do this, but there is a provision in the IRS code that allows for these. So basically it's a like-kind exchange specifically for real estate. It used to be where it could be used for like boats and airplanes and stuff like that, but they took that off and honestly didn't really have a big impact on the market overall. But from a 1031 perspective, what happens is if I own a piece of property and I sell it, if I put it in a 1031 exchange, I could take the gains of the sale of that property and buy a new property, and I will not be taxed on the gains. Right? So very tax efficient way. If you're going to sell a property and then buy another property, very much makes sense to do a 1031 so you don't have to pay gain or taxes on those gains. In order to do that, though, the IRS has said that you need to have a qualified intermediary or accommodator that actually manages this transaction. So it's not something that you can do on your own. So again, let's say I sell the property. I need to find an accommodator. I'm going to take the gains of the property of that, and I'm going to hand those funds over to this accommodator who's going to manage that money. I'm not going to have access to it. The accommodator will, and they are going to be the signer on the account. It's an escrow agreement here, right? And then when I'm going to buy a property, I have to contact that accommodator, and they have to help facilitate that transaction. right? And then they do the tax filings and stuff like that to make sure that everything is done to the letter of the law, and the IRS is happy. So these qualified intermediaries, again, they need to manage these escrow accounts. It's a three-party account. Oftentimes there's very complex interest splitting. So a portion of the interest goes to the accommodator, a portion of the interest goes to the person that's buying and selling the properties. The accommodators will oftentimes take that fee in different ways. There's 1099 INT forms done. There are specific time frames. There's a lot of paperwork that needs to be filed and followed up on. So to be able to do all of that within the banking industry, we have, again, in our ZEscrow platform, a lot of ways to be able to make that a heck of a whole lot more efficient. And just from a exchange prospect that we talked to with one of our banks, it feels like you understand our business better than most tech people we talk to. I love this. It's going to work great for our business. So we love hearing that. Municipalities, I'll tell you what, municipalities use these in tons of different ways. I already gave you one example with the subledger accounts. Lots of times municipalities, because they are accountable to the public, when they get approval to use funds for specific projects, oftentimes they want those in separate accounts, but they don't want to go through the whole rigmarole of opening up every single additional account. So oftentimes they'll use these sub accounts. So we have that, make sure that there is that accountability of how those funds are being used, that there's statements they could use, different access and stuff like that. Municipalities also use it for surety bonds or retainage accounts. So you're thinking about, the municipality contracts with someone for a huge contract. Oftentimes those contractors have to put up a portion of money that will be held in escrow until which time the project is complete. But there's a lot of different ways that they use it. Custodial accounts for minors is another one. Court systems use these quite a bit as well, that are oftentimes part of the government work. But just one prospect that we talked to with one of our banks said, "This is so user-friendly. I don't have any questions. It just seems so easy." So again, my purposes for sharing all this is not to say, these are the use cases that you need to use it for, but I hope that what your takeaway is that this can illuminate a little bit more of some of that theory that we talked about to very specific examples so that you can then translate that to other things that you might see in your market. We've had such a fabulous time working with so many great partners, our commercial our financial institutions that we work with. We feel extremely lucky that we haven't launched the platform that long ago. It was the beginning of 2022 when we really went to market after some testing with our initial banks that were on the ZEscrow platform, and now we're working with 88 total financial institutions throughout the U.S. As you can see, we have banks who have headquarters in 25 different states, and continue to grow from that perspective. We've had the privilege of working with lots of different cores and online banking providers throughout the entire ecosystem, as you can see here. And then obviously, those of you that are familiar with the core systems know that many of them have different flavors, of which we've worked with as well, to make sure that the ZEscrow platform is one that can be used right along with your other cash management and treasury management offerings. And so as we've been growing and going to market, you can see we're close to 6,000 different organizations across multiple different verticals using the platform. And the commercial deposits that we've been able to help grow specifically within the escrow space, as you can see, has just it's been a great experience to help our partners, our financial institution clients, get deposits in what has been a difficult time to get deposits and to grow. And we can continue to see this increase time and time again. So again, just a real quick case study: an $8 billion bank in New Jersey. They're utilizing a strategic plan to grow deposits, specifically within some niche verticals, both in New Jersey and New York. And so attorneys, municipalities, and property managers were the big focus. And you can kind of see the growth that they've had in all three of those verticals in a very short period of time. And are continue to see this. And all these deposits, both from the previous slide as this one, this is a snapshot of just one portion of the relationship that these customers have with these financial institutions. within the escrow space specifically. But if you start looking at other types of deposits they're now keeping at these financial institutions, as well as the loans that they've been able to generate or renew or refinance, have been quite significant. And then just a quick quote from one of our clients here, Giovanni over at Encore Bank. A powerful combination, a powerful tool, great partnership to be able to distinguish themselves and us working with them. So as far as kind of the prepared remarks go, as Catherine said, we have about 30 minutes, which is where we're at. The next thing that I want to go through is to actually share a demo. So, we went from, again, the really big, broad theoretical concepts of the evolution of escrow and commercial banking, the 4 modes of banking, horizontal solutions, and how that's breaking down with the vertical needs that are coming on board, as well as the additional competition that's coming for those that have focused very specifically on those specific verticals. And then how we might apply that into the commercial escrow space in a way that can help you grow commercial deposits, have a platform that can manage many different types of escrow accounts from a horizontal perspective, but can be customized to work within those very specific verticals. So now, after sharing some specific examples of property managers, municipalities, 1031s, now what I would like to do is go even a step further and actually show you what it looks like on platform. So with that, if you do have any questions about anything that I've shared so far, as well as if you have any questions on what I'm demoing, please feel free to put them in the chat. And as Catherine had mentioned, we have lots of different types of verticals. So if there's any specific verticals that you'd want us to double down on, happy to do so. So what you're looking at here, this is a demo environment. Well, it's our actual real production environment, but Focus Federal Bank is not a real bank, right? So we don't want to show any real banking data as we go through this. But a couple things just from the top. The ZEscrow platform is a fully white labelable platform. We call it ZEscrow. You can call it whatever you want. We would make sure that as we build it, that it is your offering, right? It is a web-based application that's hosted in AWS. We do create different instances for each of our financial institutions. There are 3 levels of access within this platform. What you're looking at here is that first level of access, which would be the bank. The second level of access would be your commercial customers. So as an example, Bishop Blaine and Braxton, who is a law firm, would have complete and total access to their aspect of ZEscrow to manage their accounts. Then the third level of access is limited and optional, but it does exist, which is down to the sub-account level, where if there is a beneficiary associated with this. So remember how we talked about kind of that third party, that customer, that beneficiary. They might not have any access, but in some cases, our platform does, or in all cases, our platform allows your commercial customer to give them access if they want to. So in this case, Mike Thomas, if the Bishop Blaine and Braxton wanted to invite him to have read-only access, they could do that right there to be able to do that. Now, in some cases, maybe you don't want them to have read-only access, but maybe they want them to still receive statements. We could do that as well. Maybe they don't want them to have read-only access, but they do want to get a W-9 through an electronic format. They could do that all through the platform. But those are the 3 levels of access that exist within the platform: the bank, your commercial customer, and then the beneficiary. From a high-level perspective, the way that the platform works is that on your core system, you would have what we term a holding account. So for Bishop Blaine and Braxton, the total balance is $279,631.92. That would be sitting on the holding account on your core. Then your instance of the ZEscrow platform would be the system of record for those individual accounts. From an FDIC insurance perspective, as well as there is a beneficiary associated, they are individual accounts. Also, when you have a legal requirement not to have funds commingled, they are considered separate accounts. It's just the record keeping is on the ZEscrow platform, whereas the funds are sitting in a holding account for Bishop Blaine and Braxton. So if I went a step higher up and went back to the bank's view, on the core, they would have one account for Bishop Blaine and Braxton for $279,000. They would have a different one for Tennessee Titans Management for $102 million. so on and so forth. So this is why there does need to be some connection between the core and our platform. So we just want to make sure that we can get those systems up together. So within that connection, I see there's a question that was put in here that is tied to it as well. Specifically, how do we connect with the core? A question about COCC or not currently have an API. How are you handling the day delay when closing attorney escrow accounts? Sounds like a great question. We'd be happy to follow up and see what we might be able to talk through in that case. I do know that in some cases, the day delay is something that can be worked with end users. In other cases, they might say that a real-time connection with the core is important. If there isn't a specific API to the core, there are a lot of different options to look at. There's different API integrators that can work on that particular problem, like a Port X or like a MuleSoft or a Mesh. There's several different ones. I know COCC just announced a partnership with someone to be able to offer some of that as well. Within the platform then, so the next thing that I want to go through is, what is it that they could do here? So again, historically, when you have a commercial customer that's managing these escrow accounts, oftentimes there's very little to nothing that they could do to manage them on their own. They would have to get in contact with the financial institution to be able to take action on them. But here within this platform, they are able to self-serve completely. Let's go ahead and dive. Let's go into John Smith and Son Law Group as an example here. So they're able to log in. They can see all the the transactions that are going back and forth between perhaps that operating account and the sub account, or sub account back into that operating account or master account. They're able to pull any documents that they need from a statements perspective, full reporting capabilities where they can actually, they're able to pull any reports that they need for their specific sub accounts. There's a drop down of different reports they're able to pull. The bank has access to even more than the client themselves, but you could pick date ranges. You could export the data into a CSV file. So a lot of different options from a reporting perspective. I think the biggest thing that we like to take away is that, when you have a law firm or property manager, someone who's using the platform, the data for those accounts is theirs, right? So they should have access to it in reporting and statements as well. Here's where they can actually manage the sub accounts themselves. You'll see here we have a bunch of different folders that are set up. So if a firm doesn't have a lot of accounts, they don't need to use folders. They could just have individual sub accounts. But when they do have quite a few of them, or they have multiple people using them, they might want to create different folders. This is something that they have complete and total control of. They can create any folders they want, name them whatever they want to create that organization. They can also nest folders in there. So for example, let's say that you have a law firm that's also acting as an accommodator for 1031. And let's say they have it in different states. They're able to create a child folder to the 1031 exchange one for different states that they could then post those accounts into. So a lot of flexibility for them to be able to dive into all of these different types of situations and use it for the ones that make the most sense for them. And I'm going to go ahead and go to a different use case here. So let's say this is a property manager using these for security deposits. So now they have folders set up based off of buildings, or maybe they have it based off of states where they can put those things in there. But if we went into these accounts, again, this is the property manager, Tennessee Titans Management. I have the ability to edit the details for that beneficiary, change anything that might happen from that perspective. I have the ability, as I showed you before, to invite that beneficiary. I could also transfer the funds. So I could move the funds from the master account into a sub account, or vice versa. Have the ability, again, to do all of this from a self-serve perspective, inclusive of closing the account, which also calculates any interest as well as any splittings that come from that setup for the particular account. We also have an account documents section. The W-9 is available here. However, they do have the ability to upload additional documents that might need to be associated with these accounts. In some cases, like for 1031, it might be the exchange agreement. For a security deposit, maybe it's an itemized deduction form. For a law firm, maybe it's the instructions that they need to follow before releasing funds for their particular custodial trust account, right? A lot of different options from there. And then if this is a use case where we're generating statements for the individual beneficiary, those could be there. The 1099 INT forms could be there as well. A lot of options from that perspective. All of the things that I just showed you in regards to the actions that can be taken, going back to our discussion on the 4 modes of banking, is those actions can be kicked off by any of the 4 modes. So I was showing you the graphical user interface. So that would be a user-driven experience. However, if they called you up and said, please just do it for me, you would have access to this platform as well to be able to do those for and on their behalf. However, let's say you have a new property manager, or you have a new title company or qualified intermediary that's going to use this platform. They say, look, I have hundreds, if not thousands of these that I need to convert over. We could get all of that data in a CSV file or an Excel file, and we can do a bulk action or bulk upload to get all of that taken care of. Or to go even a step further, if you have a company that has a good, robust software system that API is connected to it, all the data triggers that are needed to know when to open up an escrow account or close an escrow account or fund an escrow account is available in those APIs. Awesome. We can connect your bank's instance of ZEscrow for that particular client to their API system, where they could run it completely headless. They don't need to log in. They don't need to do anything. They just need to update their own internal software system, and then that translates all the way through to manage the rest of this. So the last thing that I wanted to go through from a demo perspective is just how is it that we can actually set up the platform to support all of these different verticals. The way that we do it are through templates. So you can see here in the settings page on the sub-account configuration, we have multiple different templates that we could look at that will define how a sub-account is managed. Once we build a template, we can apply it as broadly as we want or as narrowly as we want. So as an example, let's just create a new configuration. What is the interest rate that's going to get paid? Let's say it's 1%. Who's going to be earning that interest? Is it the beneficiary, like in the case of New Jersey security deposits? Is it going to be the organization, like in the case of a municipality who's just opening up a sub-account, but the funds still belong to them? Would it be split, like the New York tenant security, or like the 1031 exchange? Or is another party like an IOLTA account? Let's just go with the split, because then there's more questions you need to answer. If there's a split, how is the organization going to keep a portion of that interest? Is it going to be as interest, or is it going to be as a fee? Right? Again, it depends on how it's set up. And then from there, how do we actually split it up? Is it, and then what's that percentage? Does the interest that the organization keep need to be swept to another account, right? There's a lot of different things. Do we need to add tiers in regards to balance or based off of how long the age is? Are there other things that we need to put within these templates, like sending out account opening notifications when an account's been opened, or producing statements for the beneficiary? Because as a bank, you don't need to produce statements for the beneficiary. You just need to produce it for the organization, however that organization might need to or want to. Right? There's a lot of different things that can be done with these templates that allow this horizontal type solution for escrow accounts to actually be customized for specific verticals. The last piece that I want to share, not on the demo, but just in general, is that as we've gone through all this, for some of you, this might be new material for you. You might not be super educated on commercial escrow use cases. And even if you are, there's a lot of nuances to both the platform as well as specific use cases. So when we built our company, it was super important to us that, yes, we do have the software to be able to support these things, but we know just as important as the software are people to help as well. So we have an entire client success team that is dedicated to working with all of our clients, our banks, to be able to help their success all along your customers' journeys. So if it's to do training for y'all internally, no problem. Let's figure out how to do that. If it's you want to do a demo for a current client or a prospect and you want some help where we'll actually do the demo right alongside with your sales team, we are happy to do that. if it's onboarding a new customer, whether they're doing like a bulk upload or an API connection, or they just have some questions, we assume that we're an extension of the teams that we work with from a bank's perspective. So that is the demo that I wanted to go through and just share the ZEscrow platform. Hopefully that shed some additional light on how the platform works, how we can help with commercial escrow accounts, and again, to ladder all the way back up to the top, how to help you grow commercial deposits in a very efficient and effective way.
Great. Thanks so much, Nathan. That was a fantastic demo and great information as always in the presentation. I haven't seen any questions come through, and we are at the end of our time today. So I'm going to go ahead and wrap this up. Thanks so much to everybody for joining us today. As I mentioned earlier, you will receive a copy of this as soon as the webinar completes. So thanks, everybody. Bye-bye.
Thank you.